Hey guys, Marty Boots here. Um, my girlfriend is sleeping here at the moment, so I just have to be quiet while recording this. So you might have to turn your volume up a bit. Anyway, this is probably one of the most important videos you'll watch, and it's a good lesson, and it's a very simple lesson, and there's nothing fancy about this, but it's a very important video and a very important lesson that people should understand, and it is a simple Fibonacci. There's nothing too fancy. Again, it's a simple Fibonacci lesson, but also a simple Fibonacci how to read Bitcoin and if we are at bottom or not, and incorporate it with the Fibonacci's. I will be using price action, and it's again very simple, basic price action, but I think it's something everybody should know. So with that said, I'll start here, and I'm using 6 months charts. I think I'm using all 6 month charts anyway for the time being. So you can see the Fibonacci here on the big 6 month candle, basically from down around the 1800 to the 20,000. And if you have a simple fib on that and you see the drop comes right down to the 78%, which is flawless. I mean that's an expected fib level in crypto. It's a very important fib level in crypto. Now where did it bounce to? It bounced back to the 618, failed, and came down lower. Now this, if you come into the 78% level, it is a bear sign. It's a sign of a weak bounce. It is a sign that most likely after a bounce prices are going to go lower. Okay, so I'm assuming most people know that, but it's just simple fibs, and it's important to know that. So we'll move on to the next chart. So now you can see I am doing a fib on this candle, on this 6 monthly candle. So basically it's from the 5,800 level up to the 1,700 level, 1,720, 17,200 level. So basically we had that drop down. Now this candle, it moved up into the 23%, and that was the 8,500 level roughly. And what happened? Because this last move, you remember the last move? The last move came down into the 78. This was a 78% retrace. If you come back here, this is a 78% retrace. So because we came down to the 78% retrace, we know that it's a weak move and there will be lower prices. Now what happened? This candle could only bounce to the 23%, which coincides with this weak move on the Fibonacci 78%, and then we could only bounce to the 23%. So the weak move tells us we will get a weak move in the future. So we should have known to short here, if we would have spotted it in the moment. And what happened? Price came down. Now let me move to the next chart. So here we go. Now we're getting in the current days and stuff. So now I have a Fibonacci on this candle here, and we had a weak move last time into the 23% that was up here. So it was a weak move, so it's saying that these lows should get taken out. So what happened? Price came down and was taken out. Now here's where it gets very interesting. This is the price action we're dealing with today. So, and this is why I am calling for the 4,400 level, because that is the first fib that should be tested. And bear in mind, the 4,400, this has to be tested by June. That's the 6th month on this candle. That's the last month. So by June we need to test minimum the 4,400 level. Now, there is the possibility that we get up to this next level, which is the 5,200 level. That is a possibility. Even if we get to the 5,200 level, that's still considered a weak move in a bear market, and price will still go to new low. So we can have upside here. I mean, I don't know what that upside is. I mean, even 36, even if we got to the 50%, which is 5,800, that's a 50% move higher. Even that is still considered a bearish move in a bear market. So, it's the charts are saying we have to go to new lows at some point, even because there's no way we're going to get above 5,800. I mean, I don't see it anyway. And basically, it's saying we go to new lows. So the only saving grace I can think of is if we go down and fail. We say we start dropping now. This just drops away, and then we have a failed move to the downside. So this comes down to new lows, down to 3,000, down to 2,500 or whatever, fails, and then comes back up. Now that is the quickest way we can end this bear market. There is no other quicker way, because otherwise we're going to have to go up here and probably almost get through, what is this, the 8,400 level. Like we're not going to get through 8,400, in my opinion, before these lows are taken out. So in my view, this has to break down again at some point. So I'll move on here. I don't want the video to be too long. So now I'm going to get into the price action part of it. Now I've showed you the fibbing out these 4 candles, if you want to count that. So I've fibbed out the 4 candles for you. Now this candle here, this candle is considered a very bearish candle. There's a big wick. The buyers brought it up. Sellers were too strong, rejected. Sellers brought the price right back down and closed right on the lows. That is a bearish close, and it's a bearish candle. Now this candle, as well as the Fibonacci's, tell us that prices should go lower. So that's two major factors telling us that price should go lower. And what happened is, next candle, we got the weak bounce where the Fibonacci predicted perfectly, and we dropped to new lows because the candle was weak. Now if you notice here, if you notice here, this candle now, it's the exact same copycat, only a smaller candle of this candle. It's a very weak candle. It's a poor candle. It's a seller's candle. It's a sign that the sellers are still too strong for this market to reverse. The buyers brought it up, failed. Sellers overtook them, pushed it back down, and closed it right on the lows. It's a poor candle. It's a sign of it's not a sign of strength. There's no strength in that candle whatsoever. And this candle also tells us that these lows should be taken out at some point. So again, we have the Fibonacci's telling us that we will go lower. We should go lower. And this candle, the 6 month candle, 6 month candles are very important. The higher the time frame, the more important the candle is. So the candle and the Fibonacci's are telling us that we should go to new lows. So there's a lot of confluence with different important factors and stuff saying we're going to go to new lows. So with that analysis on BTC, just want to show you some of these charts, and these are the main, some of the main coins or whatever. Don't mind the fibs and stuff. They're just, I don't know what they're doing on the chart. I just pulled up a few charts. You can see here major resistance on a white line. We have a rising channel, and what do rising channels do? They break down. they break down. So this channel will most likely break down at some point, and that will probably be in accordance with Bitcoin breaking down to new lows. Let me go to LTC. Again, what do rising channels do? Into major resistance. Now can we push up a bit higher? Yes, probably, but I mean, this is a pretty bad tapping sign, to be fair. We have to see how that develops. And in my opinion, these rising channels will break down with BTC. I don't think anything else at the moment. I mean, is there a possibility that the bear market's over? Yes, but for me, it's 70% chance not over. Again, what do we see? It's not as clear a rising channel, but we're into previous support. I mean, this is a bit of a murky support. It's there's a bigger range, I suppose, but anyway, it's up here anyway, because and the moving average is coming down, and the price, this could go back up here somewhere before we get that drop, but at some point we should drop. Again, this is all the same. Look at the EOS. This is another major market cap in the cryptocurrency market. Again, we're up into major support, rising channel. For me, this breaks down again. So now let me show you one other thing, and I'll just start wrapping this video up, but it's a very important thing. Now, I don't know why my chart's not loading. I'll come back to LTC. Now, these are 12-month charts. Oh my God, what a time to be doing this. Okay. What is this 12-month chart or candle? What is that candle, guys? It's the exact same candle as I've explained. This is a week candle. This is a yearly chart. So this tells us on the yearly basis we need to go down to new lows on Litecoin. And Litecoin lows, well, it's down here at $20. There's 27 of this year. 24. I think the low was $23 from memory. $22. Now this candle, this tells us that the low is not in Litecoin. Now, can we bounce here? This is a yearly chart, bear in mind. So when I look at these yearly charts, it kind of scares me, to be honest, because we could bounce about for 3 years here. We could bounce about in here somewhere for 3 years and then come down and do it. Not down to zero, but I mean, even just down and pierce them lows. Now that is a concern of mine, and I don't know how well that's going to play out. I mean, I hope it's not. I hope it's this year. I hope we come down, take out the lows this year, and have a failed breakdown, and then move higher. That is my optimal solution for this bear market. Again, this is Ether, ETH. What is this, guys? This is another bear candle, really bear candle, and this is saying that we should take these lows out at some point. Ether should go to new lows at some point. And again, I think it's going to be when Bitcoin breaks down to new lows. So these are all very major, important confluence signals that the bottom is not in this market. And almost finished, guys. There's probably 2 minutes left in the video, but it's a couple of important things. Again, look at this on EOS. The likelihood that we should take out these lows, it's very probable that we should take out them lows, because that's a bad candle. Now, I don't know when or what, but I'm just saying it's not a good candle. No, but this can bounce some a little bit. But anyway, guys, I want to finish it with this. So where is the Bitcoin bottom? If we are going to take out the lows, and I'm 70% sure that we will take out the lows. You know, the first target is here at the 88%, and I'll give a shout out to Marius, but I had this level anyway, and I'll show you why now in a minute. But Marius was using this 88%, and he says it works really well in crypto, so I added it to my charts tonight, and it happened to be right at my level. And why is it at my level? Because look at this 6 month. There's support here. There's major support here in between these two 6 month candles, and if you break it down to the monthly chart, you can see it even better. I'm not going to do that now, but if we don't take that out, you know, if we do take that out, sorry, there's a likelihood that we are going to go back to $1,000. You know, and that really depends on how high we bounce. If we bounce here, sorry, wrong chart, guys. If we only manage to bounce to the 4,400 level before June, my opinion is that this market is going to $1,000. Now, if we can get above 4,400, say we rally to there, to the 38%, now that's a little bit of a stronger move, and then it's possible that we go maybe down to this 2,300 level. So that is my analysis, a very rushed analysis on BTC here, and the markets, altcoins. But 17 minutes in the video. But I hope this, guys, helps you, and you know, there's nothing too technical in that, but it's pretty simple. But it's basics that everybody should know. So if you've got any questions or anything, just let us know on Discord. And thanks for watching.